options kind of run the show now. They not only tell sort of what's going to happen, where the bets are being placed, but they also move equities around. What are you seeing from your perch on the options market? Any sign of full capitulation yet?
Good morning, Brian. We are certainly getting closer. We are not seeing that full capitulation sign yet. The two things that we're always looking at is volatility expectations. They've spiked. That's the VIX. They've spiked, but not nearly as much as they did in like the Great Financial Crisis or COVID. But we're also really looking at correlation. So what that is when all the stocks and everything begins to move together. And I know that certainly felt like the case recently, but it's not quite at the level of Great Financial Crisis or COVID.
Yeah, explain to us the difference between now or the last couple of weeks and March of 2020.
Sure. I mean, we're talking about, VIX and those volatility measurements in the mid-30s versus, twice as high. As much as it feels painful now, I would also point out that so much positioning has been pulled back. So the trading that we're seeing now feels a little bit more like a buyer strike and everybody kind of just getting out of the way. We're not seeing these surges in volumes that also are related to surges in volatility. So everyone's kind of just either waiting for the Fed to finally throw a real, gauntlet down. They didn't use that 75 basis comment and really shake the market so we can rebuild, or waiting to see if the stock market basically just does the Fed's job for it.
Yeah, and in March of 2020, now again, very different story, pandemic, panic, lockdowns, everybody just hunkered in. The S&P 500 fell, I think it was, we'll call it 31% from its high to its pandemic low in like 6 or 7 weeks. We're only down about 16% from our all-time high. I shouldn't say only, Chris. I know it's painful to watch for a lot of people. But the point is, bottoms historically, whether it's 2000, 2001, 2008, 2009, 2020, they're down more than 16%, are they not? I mean, the Nasdaq's down more. I'm talking about the S&P 500.
Yes, and the parallel that I've really started to look at recently is 2011. First of all, just a lot of similarities that are happening. Whether we've had our first 5-week losing streak till then, first time we've had multiple Fridays in a row where more than 95% of the S&P has sold off. But 2011 was also two-ish years after the Fed rewrote the playbook and did some unprecedented maneuvering and things. And that's kind of where we are right now. So we're down, like you said, 16, 17% from the all-time high. S&P in 2011 eventually sold off 22% from the all-time high. And the options indicators do point towards, seventh inning type thing. And if you're just looking at the magnitude of the move, that's also the seventh inning type of a time period. So that's really what I would be focusing on, that parallel right now.
Yeah, so is it possible, Chris, that the Nasdaq could bottom before the S&P 500? We showed the difference just now in returns. Nasdaq down 11% from its all-time high, more than the S&P 500. Or do you think the entire market, everything, will kind of bottom at the same time?
No, I mean, I think you're right. I think we're more focused on the broader market right now, like when everything sells off together, and that would more be the S&P. We all know how much under the hood, especially in the Nasdaq, those certain technology sectors have gotten hit so hard. So I think we're maybe past. That was the first mover. I think we're now at the, let's feel confident it's over when everything is washed out at once in every single sector, regardless of what it is, sells off together. And that's more going to be the S&P.
Okay, and we've talked about it before, and I've said it on the air 100 times, Chris. How important is Tesla, its stock, and its options to the market? I mean, really important, right?
I think it is. Now, what I would start to wonder is in this stage, Tesla, when we had so much of the retail focus, that is not there quite as much anymore. It's just not as active. That group has, maybe pulled back, started to lose money.
They got washed out.
They got washed out. So Tesla was, the beacon for that group. And now that group is not as impactful, it's still obviously a very impactful stock, but maybe not quite as much as it was in 2011.